Good morning. My name is Giancarlo Grosso, Director of Strategy and Business Planning at AMCHAM Korea. Thank you for joining us today for our webinar hosted by the Private Equity and Startup Committee. Today we are discussing an exciting and crucial topic. Korea has long been acknowledged as a leader in technology and innovation, attracting a broad spectrum of foreign investors and multinational companies. A recent example of this is the AMCHAM SME Collaboration Forum last Thursday, where Qualcomm Korea partnered with 7 other Korean SMEs to discuss industry convergence and diversification. Startups are booming in Korea, and with this growth comes the challenge of securing funding. So how do startups obtain the capital needed to succeed in the market? And what do investors look for when they choose which companies to invest in? The AMCHAM Private Equity and Startup Committee has worked with these 2 investors, or these 3 investors we have, to share insights on these and many other questions startups face. Today we're joined by James Ahn, Managing Director of Clayton Dubilier Rice Asia, Tae Hea Nahm, co-founder of Strom Ventures, and Richard Song, an investment professional with Altos Ventures. James, a co-chair of the AMCHAM Private Equity and Startup Committee, joined CD&R in 2011. He has a wealth of experience helping both MNCs enter the Asian market and Asian companies expand beyond their home market with M&A capabilities. Tae Hea from Strom Ventures is an expert in B2B startup investments. He oversaw the sale of more than 9 exits acquired by MNCs, including Qualcomm, Adobe, Cisco, and Workday, to name a few. Tae Hea is currently an adjunct professor at the Korea Advanced Institute of Science and Technology. Richard from Altos Ventures investment team served as CFO of Coupang, one of the largest e-commerce companies in Korea, and Hidisk Inc., a mobile component manufacturer. He has served as the head of the M&A division for Siemens and a banker for Merrill Lynch. His robust financial experience and recent venture investment experience give him a keen knowledge of the details around startup funding. We hope this webinar will benefit those in the startup and SME category, especially those needing additional investment to grow and expand. In addition, the topics covered in this webinar will help investors who need to reevaluate their portfolios and verify their investments. Utilizing virtual meetings such as this one to provide valuable insights to our member companies is a crucial goal at AMCHAM. We continually strive to enhance business and trade relations between Korea and the United States. I want to thank all of our speakers for sharing this valuable content with us today. Please note that this session will be conducted in English in a discussion format. If you have any questions, please use the Q&A function at the bottom of your screen. Without further ado, I'd like to hand it over to James.
Yeah, thanks, Giancarlo. Thanks to AMCHAM Korea, and also would like to acknowledge my co-chairs, Nina Kim and Charlie Chang, who have been co-chairs with me on the Private Equity and Startup Committee. Today we have a real treat. Maybe I can ask Tae Hea and Richard to turn on their cameras. We have the opportunity today to do a roundtable discussion, and even in a Zoom format, we will try our very best to make it more of a conversation than a presentation. But we have a real treat because we have 2 experienced both investment professionals and operators, which give us a unique vantage point on raising money as a startup, because they both come from an investment background, but also have been involved in the companies themselves. And we also have a unique opportunity because both work at global investment firms that have been quite active in Korea. So we can also have a discussion around some of the commonalities and maybe some of the differences of raising money and operating in Korea versus other parts of the world. So today we'd like to touch upon a number of topics. I think we'll speak a bit about the investment opportunity landscape in Korea. We'll spend some time talking about the investment criteria. What are the things that they look for in companies? And then we'll move over to a discussion, a bit of a, top tips or advice for startup founders and startup CFOs on how to raise money from external investors. And then finally, we'll try to touch upon putting Korea within the global landscape and how Korea compares with some other countries where startup investing, where both Strom and Altos have done some startup investing. So before we kick off, let me give Tae Hea and Richard 1 minute to maybe do a brief introduction of themselves and their firms as well. So Tae Hea?
Sure, thank you very much for the introduction and the opportunity to participate. So my background is we immigrated to the United States when I was 5 years old, didn't have much say in the matter. And since being a VC now for over 20 years, I've been investing in both Silicon Valley, primarily in Silicon Valley where I'm based, but also in Korea and Europe. And as a firm, we focus on B2B software.
Great, thank you. Richard?
Yeah, great. It's nice to be part of the panel. Look forward to having a good discussion. Hopefully it's helpful to a lot of people on the call. I was born in Korea, moved to the States when I was 7, basically grew up there. I always had this sort of wanted to come back to Korea, was able to do that in 2006. So since then, I've been living in Korea. It's been, I've only been a venture capitalist or investor for the last 2 years, but it's a lot of fun and it's a great market to be in. Korea is really fantastic, growing fast. There's we kind of call it a hidden gem, but it's a great place to be. Thank you.
Great. Maybe we can kick off the discussion, framing the opportunity set in Korea, right? I mean, obviously there's been a lot of very high profile and successful companies built out of Korea, but as we look forward for the next 5 to 10 years, what are the different areas that you guys are looking at and where you see the biggest opportunities for Korean startups?
Maybe I'll start first because I think, we're more focused than Richard at Altos. So in the past, we've invested in like Korean game companies and Korean semiconductor companies that have done well, started by Korean founders. We were investors in Com2Us and we're investors in Hagen, another successful game company. But the place that we're excited in and where we're focusing is on, as I mentioned, B2B software. And the reason for it is that we're seeing with the emergence of the cloud that the entire B2B software stack all around the world is getting transformed with adoption to the cloud and then next with AI and data. And so we've invested in 200 of these companies and have and then several have become like unicorns in Europe and also in the United States. And I think Korea is now prime for it because we're really starting to see cloud adoption also emerge here in Korea as well.
Sure. For Altos, I guess sometimes it's a little bit easier to explain what we don't do because we are pretty broad. What we don't do is we don't do high tech investment, such as what we call a hardware, a semiconductor. We just do not have the knowledge or specialty to really understand what is happening in that market. But the areas that we are focusing, we call it consumer tech, fintech, gaming and media. I think these are where, as opposed to the customers are individuals like us. So for us, it allows us to basically have an idea what the company is doing and follow that up. And I think, as Tae mentioned, I think the couple areas that we think is changing, I think is B2B. I think that's an up and coming. I think in the past, lots of companies, lots of businesses did not outsource. But I think given what you hear in the markets today, where it's so hard to hire good developers, it's becoming more and more difficult to actually build a stack in-house. I think lots of companies are now opening up to sort of being able to, you call it SaaS, software as a solution to be given out. I think the other places are, fintech, you hear about it all the time. The one area that we're trying to get smarter on is actually crypto. We still don't get it, but it's when you see the smartest people at the younger generation all going to that area, we just think that something's going to happen where it will evolve. It'll probably not be what we think today. It'll be something different. But I think that goes to the thesis where we just have to admit that what we don't know, and we're here to learn and see how things are changing. Well, lots of opportunities.
And then are you guys seeing that, especially when you talk about B2B and cloud, that these companies and startups in Korea are global companies, or are they still primarily serving the Korean market and Korean customers?
We're seeing both, to be honest. What we're seeing is there's increased interest in Korean companies, especially small and medium businesses, wanting to adopt SaaS solutions. And so as a result, many companies starting to sort of serve that previously underserved market. At the same time, there's companies like Sendbird and others, which are where investors like in Blind, for example, which have done very well selling in particular to the U.S. market.
Great.
Yeah, so I agree. And then I think there's companies that are Korea focused, and the companies like Bespin, which one of our portfolio companies who are doing not only Korea but also in China and the U.S. But I mean, I would encourage people that yes, going global is important, but it's not a must. I would encourage a lot of these startups to really focus on one market first. I think one of the things that we've preached a lot is focus, prioritization. So I think if you have a product to get global, that can go global, but win the Korean market first. If you're not winning the Korean market and then go global, it could become very difficult. So, I mean, it depends on the company and the solution you're providing. But I would really try to focus on the prioritization. It's almost like having two. I mean, if you have an operation in Korea, operation in the U.S., you're fighting a two-front war. Which is much more complicated and difficult to do. When you have typical startups, limited resource, limited capital, limited people, it's probably better to focus on one market and do well before you go abroad.
Yeah, good advice. I wonder if we can shift a little bit towards what makes a great company. When you're evaluating the hundreds or thousands of companies that come to you or send you their pitch books, what are the investment criteria? What is it that you're looking for when you look at a company?
Well, I guess the first thing I've learned after doing this for a while is to be humble. Our best returning company was started by a founder when he was 24 years old from Portugal. This was his first job, was starting this company. The company is now the leading call center software company, and it just closed around $10 billion. And he's the founder CEO of the company. So the first thing and he had no prior experience in startups beforehand. So what we realize is that you can have great founders that in a sense have no real experience beforehand, but he's on building a fantastic company that we're excited about. So with that, what we've decided as an early stage investor is to have a two-part filter. One is for cases like Tiago, where we invest, where what we look at primarily are traction metrics. In other words, are they having early traction in their business? And if that is the case, then the idea is that we'll invest and also help the entrepreneurs sort of grow in their journey as well. The other is where we look at companies before they have traction, but it's a proven team that we think can do it again. So So we obviously, if you have both, that's the best, but it's hard to find ones that just have both. So we look at it as sort of a bimodal filter.
So Tae Hea, does that mean that you then focus like not on the super early stage, like investing in an idea, or are you looking for companies that have already built a product and are moving forward with some metrics that you can take a look
Right.
at?
So this is where the bimodal filter comes in, is that it was a pre-revenue company, and pre-revenue could just be a person and a PowerPoint. That's when we really look at, is this a space we really want to invest in, and do we believe in the founder? And so it's really just a belief in that. Understanding the company will probably pivot several times before they get traction. On the other hand, what we've seen is, like this company talked to us, I mentioned with the Portuguese founder, is companies, especially all around the world, getting early traction with teams that have minimal prior experience and have since created, become unicorns all around the world.
So I guess I'll give you the answer I'm supposed to give, and then I'll give the answer I really think. So what you're supposed to do is, like, what is the problem that you're solving? Like, I mean, a lot of people come with a pitch deck, but it's very difficult to understand, like, what's the problem you're solving? So I just want to understand that. And then, you know, if you solve this problem, how big is the market? Like, is this a $100 million market? Is it $1 billion market? Is it a $10 billion market? So the TAM. And then, you know, why is your solution, you know, different than everybody else? What is your differentiated piece that makes it, you know, so that it can't be copied? What's the moat you always hear? And then who is on your team, and why are they going to be able to execute this strategy better than anyone else? I think hopefully, you know, that's what I want to take away from the business plan that I see. But sometimes I don't, it's not crystal clear. So I just want to make it very simple. But end of the day, having said all of that, I think it really comes down to is the person. There's a business model, but there's the team and the person. And I think we at Altos, we tend to favor towards the person. So it could be a half-baked idea. It may not be that great, but if we believe, wow, this person, a guy or girl, like, it's amazing how much energy, the passion, you know, we know that they're gonna, I mean, like you said, the business may pivot multiple times, but we think this person is really going to succeed. I think that's the type of person that we want to back, because this is a long journey. It's not just a business plan, but we want to back the founder and become a successful company.
Great, thank you. Wonder if we can move from kind of the theoretical and ideas to more concrete examples of either investments or companies that you've been a part of. I mean, Richard, we'd obviously love to hear your experience as CFO of Coupang and the journey of, you know, all the capital that was raised there, and kind of why you think these investors invested so much money, and what were the keys to success at Coupang. And then for Tae Hea, would love to ask you about some of the companies that you've incubated and kind of how being on the other side from not just an investor, but on the other side of the business, any learnings for startup founders through that journey.
Mm-hmm. Okay.
Sure. I guess maybe I'll start with Coupang. Yeah, it was, I mean, I was there for about 9 years. I joined just within the 11 months. And, you know, so from the beginning, you know, Bom Kim, the founder, I mean, he was doing amazing with the company, and the company was growing very fast. We did, in the beginning, decided that, I mean, for us, a lot of the decision-making was based on data, and the key data was customers, and seeing how fast the customers were growing, how, you know, we're looking at the retention of the customer, how they're continuing to come back to the site. So we had all this data, but I think we eventually we ended up pivoting more toward e-commerce. And we did make a decision quickly that, hey, to really differentiate Coupang versus everyone else in the market today, that we wanted to focus on delivery. Everybody was focused on marketing and just promotions, but there was no company doing sort of delivery. And we knew that that was going to take a lot of capital. So then how do you go about and get the investors? I mean, you have to talk about the vision, but it's ultimately coming back to the data. What we were able to show to the investors was that, hey, today, if you look at the US, what happened in the US? You had the Amazon versus eBay. Amazon was the 1P, heavily logistics dominated, versus eBay, which was the 3P, the open market, what customers were used to in Korea. But I mean, I think end of the day, I think the investors that we were able to show, they believed in the story. They knew what happened in the US, and they felt like, hey, same thing's gonna happen in Korea. What that meant was we couldn't, no matter the Korean investors, they just would not understand the story because it was not a market they understood. It was not happening in Korea. It wasn't happening in China either. China, you had Alibaba and JD, and Alibaba, which is the open market model, was dominating. So it was quite, I mean, end of the day, I think the short story of it is you have to find investors who see the data and see the data like yourself and believe that your vision is what they also believe is going to happen. So I think that makes sense. I think end of the day, if you ultimately get an investor who doesn't believe that, first, it's going to be very, very difficult to invest in the company. But if you have investors who don't believe in your strategy, who don't believe in your vision, and that happen to invest, they will not be a friend. They will become a foe because they will like you to keep changing their vision or change the strategy. So I think the key is to really stick with your story, stick with your vision, and find investors who actually believe in the same vision that you're projecting. And I think, fortunately for Coupang, we were able to do that with the many investors that came along.
Curious, Richard, was the orientation towards global investors also driven by kind of their willingness for longer hold periods? Like, a lot of Korean investors with short fund lives tend to want a quick turnaround. Was that a consideration at all, or?
I mean, yes. I mean, because it's a consideration from us, from Coupang perspective, because we did want investors that did have much longer focus. So I think that does come into an effect as well. I mean, we also tend to see, things have changed, but what happened is that in Korea, the way that the venture funds were structured, they couldn't, like you said, they couldn't hold for long term. The other thing they were not able to do is what we call crossover, meaning, you have fund A and the fund B that comes along. They could not invest in companies they already invested in the previous fund because there was a conflict. So, I mean, that's a function that happens all over around the world, but I think it didn't allow investors who would continue to invest with the company as the company grows and more capital is required. So I think we did gear toward investors who were going to continue to invest with the company, but had a long-term vision. You are correct.
Great, thank you. Tae Hea, I wonder if you can share some experiences as well.
Sure. So you mentioned incubation, and I'll give you an example of a way that we incubate a company is a company called Mobile Iron. The idea behind Mobile Iron was when we saw the smartphone market starting to happen, we felt that enterprises will need to secure smartphones for the enterprise as you start using smartphones in a mission critical manner. And so we went out, recruited the co-founders, the 3 co-founders of the company, including one who became the CEO. And then we provide the initial funding, but then built out the syndicate by bringing in Sequoia. Would then help introduce the first customers that they got, like KLA Tencor, Genentech, and others, and then help them with their go-to-market. And the key here was to build the carriers as their go-to-market channel. And so with that, they were able to go from 0 customers to getting 200 customers a quarter, and then ultimately the company went public. And so this is an example of where, by just focusing on a sector, you get to know it relatively well. And then you just can see holes, basically. In other words, you can see where the wave is going, and there are certain holes where there isn't a startup. And so then as a result, we are looking to either fill it with a company from that could be based anywhere, or in some cases, we'll also help start companies or direct founders in certain areas.
Is that a common approach? I mean, it sounds pretty unique to incubate a business as a venture firm. What kind of drove you to take that approach in that particular case?
It's because we develop themes. And so, you really want to invest in that theme. And the preferred approach is to invest in the company that's already getting traction in that space. For example, we invest in, as I mentioned, a lot of B2B software companies. The common complaint we hear from them when they're not doing well is we're not getting enough leads. And so when we saw a company that could really help other companies develop leads, then we thought this would be a great one to invest in. And that became Marketo. And we exited that at a couple of billion, but as a leading cloud marketing software company. But at the same time, you see this need, but you just can't find a company. And as a VC, we get a steady stream of entrepreneurs and EIRs and others. And so you can sort of match the two together.
Great. Thank you for that. I wonder if we could speak a little bit about maybe a comparison, maybe tour around the world of what you've seen with startup founders and the kind of businesses that are being developed. Korea obviously is well known for innovation, but I wonder how you would compare the characteristics of both the market, but also kind of the touch and feel of the entrepreneurs and the touch and feel of the startup environment. Call it US versus Korea versus Europe.
I like Korean founders because I think Korean founders, especially compared to Silicon Valley founders, have much less of a sense of entitlement, and are just, I would say, are just super passionate and really can do amazing things. The one thing though, when it comes to B2B software, what I find is being able to sell vision as CEO is very important, because software is something you can just like write that night, add a feature or do something. And so if you have the right vision and doing this, you can sell software versus like a hardware where either works or it doesn't work, And so I found that Israelis and Indians tend to be very good CEOs for B2B software companies because they're very good at selling vision. And so the one wish I have with Korean founders is that they would become better at selling vision. And the way to do that, I think, at least for me and some others, Koreans that I've met, is you have to unlearn all this sort of Confucian doctrine. This about, humility, harmony, sort of deference to elders, sort of being this sort of Confucian scholar, or something you just sort of have to ignore and be more brass-like, like Elon Musk or Steve Jobs.
An interesting comment. I wonder if there are any other tips. I mean, I think that's a very useful tip. There's just a broader kind of selling and being able to tell the story and selling a bigger vision. But are there other tips that you would share, like based on the interactions that you've had with Korean founders on, if you're going to go, especially out to global investors, these are the things that you should focus on?
In our area, B2B software, it's, the global investment thesis right now in B2B software is all based on high growth. And so being able to communicate a very simple but compelling high growth strategy and results is critical. And I feel like there's a shortage of people like Richard in Korea, people that really understand sort of financial models and sort of how to explain it to foreign investors.
Yeah, thanks. How about you, Richard? Any tips? You've been on both sides of the aisle. Any tips for startup founders?
Yeah, I think it is true. I think I do find Korean founders to be much more operational, but they do need to do a better job about selling in terms of vision and marketing. So I think that's clear. So one way around, I mean, you could see, I mean, I think I remember talking to some founders, and when they talk about the TAM size, you know, it was so small. It's like, really, but why would, if the TAM is so small, but I think that's all, again, already they're limiting the vision and the scope. Like, why limit yourself? So I think sometimes they weren't pushing the envelope and really going out there. So I think, well, the other thing I see is that, a lot of times Korean, it was interesting. More, I would say from my perspective, more startups have failed in the US than failed in Korea. Meaning it's not that more companies have succeeded in Korea, but I kind of call them zombies because they should have died, but they just keep chugging along. So in a way, it's good and bad, right? Because one way you look at it is like, hey, we want the person to have grit. They shouldn't just give up because they hit hard times. But they keep going and going and going. Eventually, and there's a lot of companies examples where they didn't figure out in 5 years, but in the 10th year or 11th year, somehow they got that far, and then the market changed. Maybe their idea was too early, the technology changed, whatever, something happens, and boom, they're off to the races like that. But that seems to be a much more smaller categories. But there are actually companies, it's maybe they should figure out that maybe this was not the best idea, and they should pivot faster or do something different. But they do keep going. So I see less failures, but I'm not saying that's a good thing or a bad thing. It's just an observation.
Actually, let me just put forward to the participants. There is a Q&A box. I should have mentioned this at the beginning, and on the bottom part of the Zoom screen. And so we'll be collecting questions for the next few minutes. And if you have one, please go ahead and input it in the box, and we'll try to address as many as we can. I wonder if we can maybe shift a little bit to the competitive landscape for venture capital, right? When you look at, especially among Korean startups, there's been a lot of government funds and government funding that have gone into local venture firms. Do you find yourselves competing directly with them, or are there almost like two different worlds of venture capital in Korea? There's kind of the global funds that invest in dollar-based or offshore entities, and then the Koreans, or is it a pretty fluid and competitive market here?
I find it a fluid and competitive market. I think Korean venture capitalists are pretty sophisticated, well-funded. And so I find it sort of fluid and competitive. The only thing I would note is when it comes to valuations of early stage companies, I find that Korean valuation is actually higher than Silicon Valley.
Is that right?
Yes, in B2B software.
Okay.
Yes.
Okay.
Yeah.
Why do you think that is?
I think it's because there's probably more money, but I'm just sort of looking at, if you have a company that's like 1 million in annual recurring revenue, and let's say doubling, okay? I find that Korea is definitely the highest. Then we have Silicon Valley, and then we have Europe.
That's interesting. I wonder if in consumer tech it's a similar phenomenon. What do you think, Richard, based on what you've seen?
Yeah, so I mean, for us, we actually felt good because we have an office in Palo Alto as well. And when we talk about valuation, we always said that we feel pretty good in Korea because the valuation is lower in Korea relative to the US. But then for the US team, they always feel better when they compare their investment with India or China. So yeah, I mean, having said that, all valuations have gone up. And I think that's, with the public markets going up, the private markets have gone up. And as you, to my point is, Tae, I agree with you. It's very fluid. There are lots of venture capital firms, whether it be pseudo government, corporate. You got now foreign investors, local investors. So I think in terms of amount of cash that's in the market, that has definitely gone up. And because of the cash, obviously there's competition, and then the valuation of all gone up. But having said that, I mean, I also would like to just, I mean, maybe this is advice to the founders. I would say, I understand from human perspective, and I felt I spent a lot of my personal time and gave everything, and then getting that high valuation it's a great feeling, and you want the highest value that you can. But you should step back from that. If you're in that position, you're one of the lucky ones. But use that opportunity to find the right partner, the venture, like an investor, because this is a very long-term perspective. And then there's actually we have Tae Hea Nahm, who's a partner at Altos. He wrote a famous paper called the Class B trap, and the Class B trap talks about this, and it's really maximizing the valuation. But what that gets into is a trap, because your next fund, your next fundraising has to be at typically higher value than your last raise, because you never want to have a down round, because down round signals that something went wrong. But what occurs is if you maximize for value, and typically the startups do not go in a straight line, right? There are hiccups, there are downturns, upturns, down. It's volatility. And if you happen to be trapped and you get that downturn and your performance is not that great, but then you run out of capital and you need to raise, and now it has to be higher, it becomes very, very difficult. The messaging becomes difficult. And then what happens also is that because you got the high value, the company, the founder, they now have to perform at a higher level to meet up to the level of the valuation. So they're gonna be more aggressive. They're gonna spend more capital. So they actually run out of capital faster. So you don't want to be in that trap. So you should be pretty careful about the type of the valuation and the type of partner that you're choosing for the long term.
That's a good point. And I mean, if you're a high flying startup company and you've got 7 offers and term sheets, how do you pick among the investors? Maybe they're all at slightly different valuations, or maybe they're coming in at the same valuation, and should you pick one as a core partner? Should you just give all 7 of them a little bit? Like, how should you go about thinking about this question?
Yeah, I go with the adage, like, too many cooks in a kitchen spoils the soup. So you don't want to go with too many investors. Doesn't mean you have to go with one. You want to go with 2. So they should use the same technique that we're using. So if you happen to be in that position to have multiple term sheets from multiple investors, we do background checks on the founders. We talk to their associates and people they know. I think they should do the same with the investors. They should not only talk to the investors, but they should also talk to the portfolio companies. You should also do blind checks. Investors the companies may have spoken to them. It's so easy now these days with LinkedIn, and everyone's well connected. So you should be able to find people who know that particular fund investors, and you should do a background checks on them as well, because in a sense, this is not a one-off transaction. This is a long-term transaction. And typically, given that many companies stay private much longer than they used to, it's a long journey. This is like 7-10-year journey. I mean, most marriages don't last that long. So just think about that. You're spending all this time with these investors, and you want to make sure you find the right investor. It's not who's writing the biggest check. It's not who's writing the highest check. You want the right person on your as an advisor to you. So I think it is you want to be picky.
I think James, another factor to consider is just how much are you raising? The worst thing is to raise a small round at a high valuation, because that's when you get locked in, as Richard was talking about. But if you raise a huge amount at a high valuation, let's say you get like 3 years of cash, then some of these other factors is less relevant, because if you can't build a successful business in 3 years, you have a lot of other problems.
Yeah. We've got a couple questions coming in. Maybe we can address these before going to the other questions that I had. Just in terms of the competitive environment, as later stage VC deals are getting quite large, do you also see yourselves now competing much more with kind of traditional growth and private equity investors, or are you still primarily competing with venture firms?
Yeah, so for us, since we're an early stage VC, we don't compete with the private equity firms or the hedge funds. In fact, we're finding them to be just a fantastic partner for us.
Mm-hmm.
So we've have several companies that once they've reached a certain level, then let's say a Vista will come in, or Tiger comes in, or SoftBank Vision Fund or something like that. So it turns out to be a very complementary relationship. Yeah, another way of looking at it is that between, let's say, VC and private equity, there's another group of investors called growth investors. And I think that's where there's more, being competition and sort of being squeezed, is less between VC and private equity or hedge funds, but this growth category in the middle.
Yeah, and it seems like the growth category is the category that everybody can participate, right? You have the venture firms growing up to do growth.
Yes.
You have private equity coming down.
And hedge funds moving in, yes. Exactly right. Because in a way, growth is the easiest area to make money. Venture is primarily investing in before a company has unlocked growth. And so there are just tons of companies out there that have not unlocked growth. But once you've unlocked growth and people know that you're a high growth company, then money just comes in from a lot of different sources.
Yeah.
And so what I find right now is it's all about really is, can you unlock, in B2B software, it's about, can you unlock growth?
Yeah. We have another question here on, do you facilitate merger between startups? For example, two companies could be in different parts of the value chain, but together can become a more significant player. Do you also look into this kind of value add?
Yes, this is something that I learned the hard way by turning down, that it's great. So I'll give you an example. Many years ago, we helped start a company called EchoSign, one of the early e-signature companies, and we owned. When we sold the company, we owned 30% of the company, and we sold it to Adobe, and it's now Adobe's cloud sign, which is doing very well. But we were also approached by DocuSign, and we could have merged with DocuSign on a relative ARR basis. DocuSign was bigger, but not that much bigger than EchoSign. And so we could have been a major shareholder of DocuSign. Instead, we cashed out. I mean, we made money on the deal, but what we learned from that since is that if we have good companies that are growing like this, instead of just cashing out, it's also very attractive.
Yeah, so my take is that
bundle it with other adjacent companies,
we will be looking
equity
to
and just sort of
merge
grow
companies,
together.
acquire
You reach
companies,
scale
or sell
faster.
the company if that makes a better sense from a
and so we've done that now with other companies.
Now, what we want, and what I think what the founder want, can be very difficult, and this is where it gets tricky, because like what I was saying before, many of the founders, they don't want to give up their vision and executing something, and so they will continue to try to figure it out, solve it. But the other issue is when two companies merge, who's going to be the CEO of the new company? I think this is where now, pride, and you have a lot of emotions coming along. So a lot of times it's a lot more difficult. So it's not something that, I think there are other venture funds who will, push a company to a merger or sell the company. I think from Altos' perspective, I think we have our philosophy is that the founder, that ultimate choice is up to the founder, whether they would like to do it or not, because they have to live with that decision. And they can't, we will never want to be in a position where, hey, I only sold a merge because you forced me into it. And then there's not a good relationship. But for us, it's really the founder who has to decide. Mm-hmm. We could come up with the option and the discussion, but it's the founder.
Mm-hmm. Great, thanks for that. We have another question here on global expansion. Many Korean startups are keen on global expansion, but many are not experienced or don't have the resources or knowledge in the target markets. Do you have any recommendations or any resources that these startups can leverage as they think about entering new markets?
Whether it's about entering global markets, it's really about going back to sort of how to unlock growth. And it's actually something that I've been writing about. And so actually I have wrote a 4-step process that works with our companies on terms of how to unlock growth in B2B software. Yeah, and it's at survivaltothrival.com.
Yeah, so I was going to say,
but it really is sort of what we see as a wave, whether you're a Silicon Valley company or a European company or Korean company, in terms of how to unlock growth.
I think some companies, the answer is yes, and others will be no. But if your answer is yes, at the end of the day, it's the person, like who's going to be helping you to run that operation in that market. And I think you have to find the great person. And I think for some company, it is really good because by tapping into new customers and understanding how the market is changing for them, you could be a step ahead to what the competition is seeing in Korea. So I think it does help in that sense. But again, I would argue that you have to have the right person who can lead that team and grow that team in that country. If you don't have the person, you probably maybe hold back on it, but maybe you should focus on not just entering that market, but finding the person who's going to lead that entry into that market.
Yeah, one note I'd see is that we've seen European companies enter the U.S. market quite well with no U.S. People on the ground. We were like early investors in the company. Pipedrive is an Estonian company, early CRM company, and they got traction in the U.S. just based on Estonia. That's sort of the advantage if you build a cloud application. It sort of runs on AWS, Google, or Azure. And so from a customer perspective, they're comfortable with it. And if they buy it over the website, they don't really know where the company is located. So especially if companies are pursuing product-led growth, we've seen success in the early stages of in the US without a US physical presence.
Interesting.
And that was not possible 5 years ago, 10 years ago, I would say.
Yeah. It's almost like, these platforms have enabled people to really focus just on the core business and the core idea.
Yeah, it's just like when the iPhone came out, you have the App Store. So it just made it easier for companies to sell mobile games all around. Before they had to get it approved by the carrier, but the App Store just made it easy to sell mobile games. And that's why like Come2Us and other mobile game companies took off. In the same way, the cloud plays that role. If you run on AWS, then it's like being on the App Store.
There's an interesting question that just came through here regarding I guess, more like retail investing in startups. So, there's increasing number of platforms that have been developed to allow individuals to also invest. As a startup company, do you think, is it an advisable path for startups either in the early or later stage or pre-IPO rounds to try to raise money, using these alternative platforms? How do you see them competing with, you guys and other growth investors down the road?
Well, at the early stage, you can think of companies like AngelList, in a way that is like an early stage trading platform. And others like that have done relatively well in terms of raising money. If you ask, is it the best way? Maybe not, but at the same time, the most important thing for a company is to survive and get to the next stage. And so for some founders, that's the best path to take.
Yeah,
At a later stage, like it's talking about Series D and beyond, or pre-IPO,
I think
we're finding these trading
secondary
platforms
transaction
to be much more helpful for secondary transactions
who have options
than
and
primary
exercises
transactions.
to maybe sell the shares before the company goes
Okay,
IPO.
got it.
But on the flip side, you also have to be careful, because even if you're private, if you have too many shareholders, you may have to start publicly disclosing your financial information. And you may be regulated as a publicly listed securities company. So you may be forced into going public if you have too many shareholders. So I think you should be careful of that situation.
Yeah, got it. Yeah, there's another question in here which I'd like to modify slightly, but the question itself is, have you ever invested in Korean university lab startups? But I'd like to broaden that question a little bit to incorporate, like, where do you see the sources of startup founders? Are they mainly like big corporate guys? Are they like the young 22-year-old people? Are they from, universities? Like in Korea, where do you see the rich source of potential founders?
I'd say that they've come out of successful companies in that area. Like, they came out of like Blind founders came out of Ticket Monster.
And it's pretty much similar to what you would see in the States or in Europe.
Yes. There are, especially in deep tech and others, university startups, technology teams that could come out, which are great. And there's also, as I mentioned, like TalkDesk is a first-time founder.
Founders come from all over the place.
24 years old.
So they could be young, they could be old.
So
there are lots of founders for us that come from straight out of college.
Especially with the growth of accelerators and incubators all around the world.
I see a lot of calls. I'm getting a lot of calls now from employees of Coupang who have left and now are interested in getting, founding their companies. But we also see, even moms who, I guess because we're in that consumer side of the business, we see moms who happen to see a good idea and they want to take it further. So, but having said that, I think for us, the best way to get to know other founders is through the existing network of founders that we have, because they're constantly talking to their friends and other constituency who have ideas, and they're basically, hey, go talk to Altos or whoever, like the VCs that they know, that to get ideas or guidance on what they should be doing. But they're coming from everywhere.
Yeah, got it. We're kind of coming towards the end of our hour here. The one last discussion topic I wanted to ask you about was, we've had a lot of big successes. You guys have been a part of those over the last several years from among Korean startups. Where are we in the game? Are we in the second inning of the game? Are we in the seventh inning of the game? Like, how do you see the next 5 to 10 years? Are we at the top of the bubble? Are we just at the beginning? Where do you see for Korean startups, where we are in this cycle?
Well, I think if I look at it from a 5 to 10 year perspective, I think we're at the beginning. I think success just breeds success. So I think with that, you'll just start seeing even better Korean startups in the next phase. Whether it's like, women LPGA golfers or, others, Koreans excel. Once they figure out the formula, they excel at it.
Yeah, so I would agree.
But I think the next,
in the early stages,
on the short-term basis, there may be just a correction in the
10 years.
in
10 years ago,
the tech startup world worldwide, not
students
just
coming
Korea
out,
specific.
their first go-to place they wanted to work was at Samsung, LG, Hyundai, like the big conglomerates. I think today, most young generation, they don't want to go work at Hyundai and LG. I'm sorry it's for the big corporations, but I think they all want to now go work at a startup. I think that has changed the mindset. I think younger generation is looking, to be more free and come out, express and build something. And I think with more ideas, you're going to have much more opportunity. And now the ecosystem, 10 years ago, you couldn't get a VC funding for a lot of these ideas. Today you can. So I think what that's going to allow is even more ideas, revolutionary ideas to spring up and develop. So I think we're in the boom time in the startup market for Korea. So I think it's a good thing.
Yeah, I really like that idea of success breeds success, right? In some ways, it's kind of like the Korean speed skating team or the archery team, or even a concept of a bit of like the 4-minute mile. People see Coupang or they see these massive successes, and then they say, "Hey, I can do that too." And so as we look forward, I'm very hopeful that the young people and the new innovation coming out of Korea will not only spur this local economy, but also, drive real innovation and, business development for the world. And so in some ways, Korea is facing a very special moment right now, both just from the startup, but also entertainment and media, et cetera. So, we're very hopeful that there's more to come and a lot more to come in the future. So anyway, on behalf of the AMCHAM Private Equity and Startup Committee, Richard and Tae Hea, thank you very much for taking time out of your busy days to spend some time with us. And we hope to connect again soon.
Great, thank you. Really enjoyed it.